What's up, traders? It's your girl here, ready to share some knowledge on the forex market. I've been trading for a while now and I've learned some valuable lessons along the way. In this video, I'll be sharing some of my top tips for success in forex trading. So sit back, relax, and let's get started. But hey, don't forget to hit on the subscribe button and also like this video. Let's get in. Teaching the beginner session, which the video is on my YouTube channel, I did talk about two forms of trading where I talk about fundamental analysis and technical analysis. Now what we are going to learn today is part of technical analysis, which is chart patterns, as you can see on my screen. And chart patterns, we have different universal chart patterns. There is a difference between chart patterns and candlestick patterns. Chart patterns are not candlestick patterns and candlestick patterns are not chart patterns. Not knowing what chart patterns are forming can be costly mistake. That is why I am using this time to teach you how they form. If you are like that, this is your opportunity to get back on track. Okay, so the first one we'll be talking about here is the double bottom reversal chart pattern. So this is how the double bottom reversal chart pattern looks like. It looks like a W-shaped formation where we have the support level, the resistance level, and also the neckline. Now, on a double bottom chart pattern is a bullish reversal chart pattern, and when found in a downtrend, and once the neckline is broken, that confirms an uptrend. The double bottom are very powerful patterns, and if you get into a trade at the right time, you start to make a lot of profit when the breakout happens to the upside. And when found in a downtrend, and once the neckline is broken, that confirms an uptrend. The double bottoms are very powerful patterns, and if you get into a trade at the right time, you start to make a lot of profit when the breakout happens to the upside. So as you can see, we have the resistance level here, which is the neckline. Then we also have the support level here. So this is the support level. We have three ways which you can trade this double bottom formation. Now the first one is trade the breakout of the neckline. So this is the W pattern. Assuming we are in a downtrend, price is moving in a downtrend, and then all of a sudden we see a double top formation. It is telling us that price is reversing to upwards movement. So what we need to do is that once we see these formations, we wait for the neckline to break. So this is now our neckline. Okay, this is the first foot, this is the second foot, and then this has become, so when you draw this line here, you see that this has now become our neckline. So once the neckline is broken, immediately we enter and take a trade. That is how some traders take their entries on a double bottom formation. Other traders will also wait for a case, or what we call a pullback. So this is the illustration over here. You can see that this is the first pick, this is the second pick, which is this side, and this side is our support level, and this is our resistance level, which is the neckline. So once the neckline is broken, the conservative traders will wait for a case, which we call a pullback. So they wait for a pullback on the resistance level. So immediately price gets to the resistance level with some rejections or reversal candlesticks, then they enter from here and then also take profits at the nearest support or resistance. Now other traders will also buy from the second pick. If you buy on this second pick, you can use the neckline, which is this side, as your take profits level, or any previous high above that as well. So you should consider buying on bottom 2 as buying on a support level, because this place is a support level. As a matter of fact, that is what it is. Look for a bullish reversal candle at the second pick, and then you can enter your trade from this side. Now if you buy the breakout of the neckline, use the distance between the bottom and the neckline in pips to calculate your profit target. So what this means is that if you buy at the breakout of the neckline, then the distance from the second pick to the neckline should be the distance, should be your take profit from, should be your distant take profit from the neckline upwards. So what that means is that, let me show you an example. So if I measure from here, if I measure from the neckline or from the bottom, if I measure from the second bottom to this side on the chart, it means that my take profit will be the same from the neckline this way. So that is what it means. So that is the two ways you can take your take profit on the double bottom formation. Now, if you are taking your trade, or if your entry is above the neckline, then you need to measure the distance between the second pick and the neckline to take your profit from the neckline upwards. So that is that for the double bottom formation. Now let's move to the double top reversal chart pattern. Now anytime you also want to enter a trade, make sure you look for a bullish reversal candlestick on the neckline or on the second pick to validate your entry. Now let's move to the double top reversal chart patterns. So the double top reversal chart pattern is just the opposite of the double bottom reversal chart pattern. So if you are looking at a W-shaped formation on the double bottom reversal chart pattern, then we will look at the M-shaped formation on what? On the double top reversal chart pattern. Now, a double top pattern is a bearish reversal chart pattern, and when found in an uptrend, and once the neckline is broken, that confirms a downtrend. The double tops are very powerful patterns, and if you get into a trade at the right time, you start to make a lot of profit when the breakout happens to the downside. So here we have the support level, we have the resistance level, we have the neckline, and then this is the double top formation. Now, how do you trade a double top chart pattern formation? First, trade the initial breakout of the neckline. So anytime this neckline breaks, that is where you enter your trade by looking for what? A reversal candlestick, a bearish reversal candlestick. Now, I love to pick my entry from here, which is the second pick. When I see a bearish reversal candlestick, and if price moves down and intersects the neckline, continues to go down further, imagine what my profit will be. Also, when it comes to the double top reversal pattern, you can also wait for a breakout of the neckline, a case which is a pullback, and then you can look for a reversal candlestick, a bearish reversal candlestick, then you enter from this level. So you have two ways of entering. With this type of pattern, you can take your profit at the previous low. So when you measure from the second pick to the neckline, then you measure that same distance from the neckline to this point, that same measurement we had on from the pick to the neckline. You measure that same measurement and take your profit at that point. So that is how you take profit on the double top reversal pattern. Now, when you are waiting for a pullback to it, is the same thing. Let's now move to the real chart and feel how this double bottom reversal pattern and double top reversal pattern looks like. This is now the chart example of the double top formation chart pattern or the M formation. So we have the first pick here, the second pick here. We also have the neckline here, which is serving as a support, and this place will now be our resistance. So what we will do is, if we are picking our entry points from here, we will take our profit at the neckline. So you can also take your full profit at the neckline, or you take your first take profit to break even at the neckline and allow the rest of the profit to run. Then you take profit at the nearest support or resistance or at the previous low. Or you can also measure from the first pick. So when we measure from this point to, when we measure from the first pick to the neckline, the number of pips it is giving us, we are going to take that same measurement to the second entry point. So this is where we are going to take our second take profit. Now, like I said earlier, we have traders who take their entry from here. We also have traders who take their entry immediately the neckline over here is broken. And also we have other traders who wait for a case or a pullback. So let's play and see if we are going to get a case or a pullback on this neckline, and then we look for our entry. So immediately there is this reaction and this rejection. It is telling us that the bears are still in power. So immediately we will pull out our short position tool, drop it here, and then we'll take our profit using this measurement. So my take profit will be from here, from the first pick to the neckline. I'm going to take profit the same take profit in pips from the neckline to this point. So this will now be my second take profit, and then my stop loss will be above my entry point, a few pips above my entry point. So let's see if we are going to trigger our take profit. So you see what's happening immediately. Our take profit, you see that immediately our take profit is triggered, price started reversing. That is why I'm saying that you can measure from the second pick to the neckline and take your take profit the same with that same measurement, because you can see that immediately price got to or triggered our take profit, there is a reversal. So that is that for the double top formation. Now let's move to the double bottom formation. This is very simple. Before I move to the double bottom formation, guys, subscribe to my channel if you are finding this session informative, and also like and leave a comment below. Let's move on. We are now talking about the double top formation, which is the M formation, and then now we are on the double bottom formation, which is the W formation. So the double bottom chart pattern, this is how it looks like on the real chart. We have the first pick, we have the second pick, which is the support level. We also have the neckline, let me change this, which is the resistance level. So we have the resistance, we have the resistance level at this point. So this is the resistance level, which is also the neckline. So you can see that we have this formation, we have the W pattern formation. Sorry, we have the W pattern formation this way. So now what will happen is that if you are the type of trader who waits for a pullback, then it means that you wait for price to pull back with a reversal candlestick, a bullish reversal candlestick, before you take your entry, you know. So, and when you are someone who likes entering a trade aggressively, then immediately price breaks out after the close of this candle, then you enter from here. So this will be your entry point. Let me put that also there. We have the entry point. So we have the first entry point. First entry point to be here, and then we also have another entry point here. So the first people who take their entry from the second pick, immediately the second pick starts forming over here. Then the second entry will wait for the breakout of the neckline. Then the third entry will now be after a pullback at this point. Now, if you are taking your first entry from the second pick around this area, then it means that you take your profit at the neckline, or you take your first profit or break even at the neckline and then wait for the rest of the profit to run. So when you're waiting for the rest of the profits to run, then you measure from here, from the second pick to the neckline, and then take your profit with that same measurement. You see, so your second take profit to be here, or the nearest support or resistance, or the previous high, which will be around this point or this point. You see, so this is where your second take profit to be. And if you are someone that is going to enter from your entry point to be after the break of the neckline, then you also take your profit here or the previous high. So that is how you take your profits. Now, those of you who will be waiting for a pullback, then you also take your entry from the pullback, and then you take profit using the same measurements from the second pick. Use the same measurement from the second pick at this point also. So if you are taking your entry from here, you also take your profit around this area. Now let's see the reaction of price and see if we are going to get a pullback before our entry. So as you can see, price has pulled back nicely here with this reversal candlestick, this rejection reversal candlestick, or even this, then we take our entry from here. So our entry will be from here, or our entry will be from here. Immediately this candle closes, or immediately this one closes, then we take our entry from here. Then our take profit will be at the nearest support or resistance, or the same measurement from the second peak to the neckline. So you can see the reaction of price nicely. Now you can see. So basically that is that for the formation of the double bottom on the real charts. This has bring us to the end of this session. I'll be talking about other chart patterns in my videos. I'll be doing a video on different chart patterns for you to get the understanding of how chart patterns work on the chart. Also, remember that forex trading is a constantly evolving field that requires a lot of patience and persistence. By staying focused on your goals, learning from your mistakes, and adapting to changing market conditions, you can build a successful trading career and achieve your dream. And guys, please like this video, comment below, and also hit the subscribe button. You can also put on the notification bell so that anytime I post any new content, you'll be the first to watch and you don't miss any of my content. Thank you once again, and peace out.